My name is Jim Burkett. I'm working with Tom Kane from True Transport Insure. A couple housekeeping items I will throw out. One, we know time is of the essence. You guys have a million ways to spend your time. Thank you for spending it with us. We really hope you find some valuable information in this presentation, but we aim to finish right around 30 minutes. So it's not going to be an hour and a half, give or take a few minutes. We're shooting for 30. You will receive a copy of the presentation afterwards, so do not worry about that. Why are we doing this? All Tom and I work with all day, every day is owner-operators, independent contractors in the trucking industry. And we hear a lot of the same questions, kind of same concerns a lot. We see a lot of the same issues. So we thought it'd be great just to level set, run through some of the scenarios that we see, some of the background to the situation going on right now with people that we work with. And there's also a national conversation going on right now in regards to independent contractor misclassification, classification. And so we just wanted to run through how that really applies and what we're seeing in the trucking industry and just try to keep everyone abreast as best as we can. It behooves us as professionals to stay as engaged in this, to make sure that we are giving the end user, the insured, best products, best coverage available, make sure that they are in a good place. So what's our end state for this? What do we want? Just really to provide value and ensure that those end users, the motor carriers, are covered as correctly as they can be. The people who have registered for this, we see a variation in their experience with independent contractors, owner-operators, and so we're trying to hit the middle of that. And so, for the people that work with it every day versus the people that really may not be too involved with trucking and or independent contractors, we hope that everyone can just walk away with something that benefits them. So I'm going to kick it over to Tom now, just to do a very brief background on True Transport Insure, not as a commercial, but just so you kind of see where we're coming from, what our perspective is on this, and take it from there. Thanks, Tom.
Good afternoon, everybody. Thank you, as Jim mentioned, for taking some time to be with us. But so True Transport Insure is a division of NSM Insurance Group. We started about 20 some odd years ago, and we are the leader in the national leader in contractor space for third-party administration of contractors. And what we do is we design, implement, and manage owner-operator programs. And our objective is twofold. One is to help our agent partners and also their customers, one, design a program that is effective and compliant, both for workers' compensation and occupational accidents, so that the customer of our agent does not fall into a situation where they have audit issues and or state issues for workers' comp because they've misclassified their owner operators as independent contractors when they should actually be employees. But we also, the objective is to eliminate their back office work. So we're trying to eliminate back office work wherever possible. So we have a footprint in all 50 states, and we have a proprietary technology package that works with our insureds and our agents, so that or they're insured, I should say. But not to make it too much of a commercial, that we're our objective again is to simply help our agent partners build a program together for their customers.
We are an NSM company. NSM is a provider of niche insurance in the United States and United Kingdom, right? About $1 billion in premium. And what does that mean? That we dive deep into a niche, understand a niche, work within an industry, but we have the resources of a large successful company behind us. So that is NSM Insurance Group. Let's get down to business here. Owner operators, what defines them? Purpose of this slide is just to work on a consensus of when we say owner operators, what does that mean? I think those of us who work with owner operators know you get a little bit of everything. And so, how do you define that? What it technically is an owner operator? In theory, the way it should function, an owner operator really is a business owner. They're going to be a driver paid on a 1099 who calls their own shots, who operates independently of the motor carrier. That's contrasted against an employee driver who is under the direction and control of a motor carrier and is paid by a W-2. And when this concept is employed correctly, it should be a win-win for everybody, in that the driver has more control over their own revenue. The driver has freedom and independence to make decisions that are best for them. But at the same time, the motor carrier has a more efficient financial model. You know, the owner operator, I mean, the motor carrier is not going to have some of the costs they would have if they had a pure employee driver fleet. So this is something that, again, win-win is the best way we can say it in owner operator versus employee driver. One key item we always look for an owner operator is that they own the tractor or they are in a lease to purchase agreement. So we think that is something that really shows that they are a business owner and that they are someone who is operating independently, that they own their own truck, and then if they are incorporated as a business or they are a business entity unto themselves, that is also always very helpful. So, where does this come from? The environment that we're looking at today, what's behind that, what drives it? So we're just going to take a look at the regulatory environment, the legal environment, and I think the easiest way to say this is that there's really 50 different environments that we're looking at. So each state will have legislation that's passed that affects it. We'll have court cases that affect it. And then you also have some federal laws and federal court cases that affect this. And so an owner-operator in Alabama may not be considered an owner-operator in New York. And that's why if you have worked with owner-operators, one of the big things that we are always looking for, carriers are always looking for, is what's the mix, what's the driver ratio. If you have 150 drivers or 125 in California or 130 in Alabama and 4 in New York, that is really going to help us go a long way toward determining the applicability of workers' comp and or contingent liability and or occupational accident, which we will get into. So take a step back from that, simple breakdown by state, and again, it varies, this isn't 100%, but the political leanings in the state generally are going to help us determine the regulatory environment. So New York, California, New Jersey are going to be operating a little differently in Tennessee, Alabama, and Oklahoma. So again, that isn't an end-all be-all, but something that isn't pretty important. And one thing that we are looking at now, and I'm sure we've seen it in the news, is the gig economy has become a pretty big force in the independent contractor world. And the trucking industry had always operated, I don't want to say under the shadows, but to a degree, I think it has. There has been some state enforcement of misclassification. By misclassification, we mean motor carriers saying that a driver is an owner-operator, but the state comes in and says, no, we're going to apply an IRS test, we're going to apply the ABC test, and no, you actually are an employee driver. There's been some enforcement of that, but I think we're seeing things escalated now with the gig economy as this kind of bright, flashing light, as states see a revenue source for employer taxes, and then as laborers see as a union see a labor pool. So trucking's kind of getting swept up into that, and I think a lot of this is personified really in this AB5 law, which was passed in California. And what that did was implement an ABC test in California. An ABC test is basically plank A, is the driver free to control the direction of the hiring entity? B, do you perform work outside the usual course of the hiring entity's business? Plank C, is it work currently engaged in independently established trade? Obviously, for the trucking industry, B is the killer here, in that if you're a truck driver driving for a trucking company, you are not working outside the usual course of the hiring entity's business. And so would that eliminate the owner-operator model completely in California? And then any other states that really implement and prosecute this law, like California seems to be. ABC test is already in place in a couple states, Massachusetts, New Jersey, but no one really seems to be amping on this quite like California. And so a lot of the talk over the last year since it was passed last fall is, what are the national implications? So there's a bunch of litigation going on right now. As of now, in the state of California, the trucking company is exempt under an injunction that's currently being argued again. The gig economy has a Prop 22 up on the ballot in the fall that could exempt them from the law. They just rewrote part of the law to exempt some freelance writers, some Hollywood sound engineer types out of it. So there's a lot of moving parts. I think the kind of hope is that if this law can be stopped in California, that a lot of the other states we're working with will kind of see that play out, and we won't see that aggressive prosecution of it. It won't spread to other states. So I think that is the thinking here. A lot to see how this plays out. Some other states are passing legislation that is, making it tougher to be an independent contractor. And so those are states when we're looking at, do they need comp? Do they need occupational accident? It would swing them more toward the comp piece. Virginia passed some laws over the summer. New Jersey just tightened up, increased the penalties and fines. And public notification of their laws. So we are seeing other laws, maybe not to the extent of California, but starting to go that way. One thing that I don't think we see any attention on is that there are states that actually are going the other way. Iowa, a few months ago, codified basically if you own your own truck, you are an owner-operator, even if you're on a lease-to-purchase agreement, which I'll get into in a little bit. Arkansas, made law that the IRS has a test that is viewed as a little more lenient than the ABC test that they put in California. Arkansas made that law of the land. And then actually Colorado about a year and a half ago made occupational accident legal. We're still kind of working through how that looks, but we do see states going the other way. And it's something that a lot of the carriers that we work with, which one or two of them might be on here, and then a lot of the ATA, the TCA, these national trucking organizations, a lot of them have lobbying groups. We do have legal teams that are actively tracking the environment in each state just to have an idea of which way to, what our approach is going to be in each specific state. So again, that's just some background on the regulatory environment, the legal scene, and kind of the thinking that goes into when we're looking at it at an account with 5 drivers in New York and 30 drivers in Illinois and 10 drivers in Alabama, kind of what our approach is going to be and where we go, be it comp, be it occupational accident, etc. So Tom is going to dive a little more into the actual product of occupational accident, what it is, and what we're looking for, some of the coverage features of it, and he's going to take it from here. Thanks, Tom.
So occupational accident coverage is defined as a supplemental policy that looks, smells, tastes, and reacts very similar to workers' compensation, where it has a medical component to it. It has an AD&D component to it. The key with occupational accident, though, is it's something that's actually purchased directly by the driver for the driver with benefits to the driver himself or herself. So that person is working for a motor carrier, and it has it deducted out of his settlement sheets on a monthly basis, and what that allows the motor carrier to do is kind of, again, as Jim mentioned earlier, curb their cost. So they don't have an exposure of 14% to 22% per $100 spent on payroll. There's about a 40 to 60% savings on what occupational accident costs to the driver versus to the motor carrier. So the cost towards occupational accident is driven really because it's not unlimited, where workers' compensation, you can get into a situation where that can extend out. There's a 2-year limit on occupational accident with $1 million worth of medical coverage capped. So what we try and do is when we talk to a carrier or we talk to an agent, what we're trying to do is really kind of hone in to what the needs are of the specific carrier. Jim, you can probably flip that slide if you could. So here's some of what the policy looks like. It's got the medical, the dental, and the disability death benefits. The kicker is where it's rated on. Your workers' compensation is rated off your mod, and that you've got a 4.5 to 5 year window what your mod is holding you on, and it can really penalize a motor carrier or a trucking company. And what happens with occupational accident, you're going to have your loss and you're going to be driven off your loss. But the better part of it is, you can dig out of that hole a lot quicker if you have some bad losses. The rating of it for a regular, just straight off the street type of motor carrier is it's based off of the way the trailers or the type of trailers that they have. So you're going to have pricing that's going to vary between somebody who has an intermodal company to a reefer company to a flatbed company to a tank hauler. And everywhere, the prices are going to range somewhere between, 125 to 180 is what we have here. Depending on the size of the group, we can probably alter some of those rates a little bit to the benefit of the driver. But what you're trying to do and trying to accomplish is get the group as a whole to purchase the occupational accident. And have it sponsored by the motor carrier, because one, it helps them from a retention and a recruitment standpoint, where they're going to have a low cost type of option for the driver, but also have the benefits put in place for them, so that if they are injured while under dispatch, there is a reactionary solution to helping them, one, heal, two, keep their bills being paid, and three, getting them back to work if they were to need a chiropractor or different various things like that. Jim, if you fly to the next slide, occupational accident generally is paired up with another product called contingent liability or contract liability. And what contract liability is that is purchased by the motor carrier. So the two policies are going to work hand in hand. The occupational accidents for the driver. Contingent liability is for the motor carrier trucking company. And what this does, this responds to any claims that say by a driver who does get injured and says, hey, I'm actually I'm an employee and I should be getting workers' comp benefits. What contingent liability will do is that the carrier will step in and defend the lease agreement that the carrier has designed and signed with that independent contractor, so that they'll say to the courts, hey, Your Honor, we see this as a defined owner-operator that fits all the criteria of an owner-operator, and there should not be any benefits from a workers' comp standpoint. So they've studied this and they've done the underwriting to allow the motor carrier to feel free, because if they have a claim, that's generally going to start at $10,000 for the motor carrier to defend themselves off the bat. And I've seen the cost get into to $300,000-$400,000 range, whereas the contingent liability is only a $1,500 to $2,500 annual policy. So it is something that we try and pair the two together, because yes, having one with the occupational accident definitely helps the driver, but if you're not helping the trucking account, you really are kind of leaving them in a spot where they can come back to you with an E&O claim, and it's not something you want to do. Again, we always say both OCAC and contingent liability are not a substitute for workers' compensation when that is required by law or by the design of the way that the employment structure is set up by the trucking company or the motor carrier.
Well, a few more slides, so please stick with us. When we look at the marketplace, I think this is interesting to note, because in the general insurance world, commercial insurance world previous to this, jumping into this, and you're talking general liability, there's 100 carriers out there who will jump in and do it. There's a pretty limited number of competitive carriers that are writing occupational accident contingent liability. And so if you are working with some owner operators, I think it's important to keep that in mind. Reason being, it doesn't really make sense to jump for $1 lower on a rate, right? If it's just, look, obviously it's like a 360-degree decision. You have to look at everything involved. And you don't really want to burn through the marketplace, because the motor carrier may find themselves in a position where there aren't many really top-notch players left that will work with them. If they burn one or two carriers and move for $1 here or something there. So, we're looking at the claims aspect, which obviously is very important when you're talking about health, when you're talking about disability payments, very personal topics here. So the claims end is important. Obviously, the pricing is important when you're looking at a carrier. And obviously, the service, there's some different aspects of that. So it's something we really do at carrier, just looking at the big picture. And then there may be some carriers that are better matched up with a specific risk, be it the states that they're operating in, be it the type of loads they're hauling. There really may be one or two insurance carriers out there who are good fit for that. Another thing that we really try to do is package it. So if you're not familiar with the trucking world, if you're not doing a lot of it, non-trucking liability, physical damage, occupational accident, generally we see the owner-operator lines of coverage, and most of the carriers out there will be doing that NTL and that PD along with the occupational accident. A couple that previously have not have started doing it in the last couple of years, added the NTL PD lines of coverage to their portfolio to be able to package it together, because this is a monthly reported policy. So every month we get a report of how many drivers are enrolled in, let's say it's, the owner operators of Smith Trucking. We get a schedule of the drivers that have NTL, the drivers that have the PD, the drivers that have the OCAC. If we have it with one carrier, one report, it just makes it a lot easier for everybody to manage. Another thing that we are talking about, workers' compensation. So obviously there's employee drivers. They will have a workers' compensation policy for the employee drivers, a separate one. We personally can do that in limited amounts, not something I think that we specialize in, but definitely can help out. But one thing that a lot of carriers that are in occupational accident can do is include a clerical or office-based workers' comp exposure. So if you have a trucking company that has some office workers, officers of the company, whoever it may be, that need comp, and that's really the only comp exposure, a lot of the OCAC carriers will package that together. So again, something to think of just for efficiency's sake. Keys to success, what we're looking at in this slide is, how do we as insurance professionals help button up our customers, help them limit their risk and also be attractive to insurance carriers. One thing we always recommend is, if they are working with an attorney, obviously we hope they are, work with an attorney specializes in trucking. There's just some ins and outs, like drawing up that independent contractor contract for the owner operator to sign. You can usually tell when it's written by a trucking specific attorney or an attorney specialized in independent contractors versus just a generalist attorney. So that's something that we always recommend. Lease to purchase agreements. So lease to purchase is a driver is leasing a vehicle with the intent to own it. Once that is paid off, that truck is theirs. We see a fair amount where the driver's leasing a truck from the motor carrier they're leasing onto. The motor carrier they're essentially working for, and that really is a lot of direction and control, and that's really tough to say that they are a true owner operator. So we always recommend using a third party. So if the driver's on a lease to purchase, even if it's Smith Leasing, not Smith Truck, you just create that third party entity the driver leases from. So that's some of the more complex legal things. A lot of very simple, easy to implement concepts that we hope that the trucking companies use. Don't direct your drivers, just the language you use with them. Don't tell them specifically what to do. Don't make them wear uniforms. Don't bring them in once a week and have 3-hour training. Drivers should own the tractor. We mentioned that before. They pay their equipment and maintenance costs. They are able to choose their routes and loads, stuff like that. And we understand it's very easy to sit up here and tell, hey, it should be this, it should be that. The truth on the ground is always more complicated than it is. But these are just some pretty simple things that if we can help these trucking companies, particularly the ones that are growing and they don't have the back office yet to do a lot of this, just help get them set up on the right path to success. It will only help them limit their exposure and just help them get better rates with insurance carriers. And I think, again, that's something where everybody wins. So there's some more aspects to this, but these are just a couple things to throw out there. Tom, you want to take it from here?
Yeah. To again, not to sound like a commercial, but this is what we do each and every day, and we're working with our agent partners to make sure that you have those things put in place for your customer. And if you needed us getting involved, we will help with that process, because quite honestly, if you can effectively utilize occupational accident work comp together, you have a great tool for your customer. And knowing it, or again, having somebody as a business partner that does know it, that works on it every day, will make you separate yourself in many ways from the other agents that you are going to compete against. I mean, there's always going to be there's going to be a strong presence from some brokers nationally that have a transportation group. But in a lot of cases, what we tend to find out is, brokers are generalists, or agents can be generalists out there and not know what the transportation market is. And we want to help both, but ultimately we want to make sure that we're putting an effective tool in your hands to allow you to build a product for your customer. We've talked a lot about the transportation industry. We've effectively put this model together for trucking companies, for staffing companies, for various organizations that utilize independent contractors, because obviously we're entrenched in the law and the learning process that comes with the independent contractor. But the most important part that we try and say to is our agents is, we're here to help you. Even if it's answering a question and picking up the phone, give us an opportunity. We'd love to help you help your customers.
Awesome. Thanks, Tom. Only thing I'd add to that is, if it's something we can help you with, a lot of times we can connect, be it, a transportation attorney, like we mentioned, another resource that can help, somebody out. That's all we're here to help, is figure out ways to help people. And then other thing, if there's any other ideas that people run into in this world, like that we could do a webinar in the future, please reach out, let us know. Either we can do it or find someone else knee deep in it that they can jump in and do it. Again, it's all about spreading knowledge. So thank you so much for your time today. We really hope that everyone took at least one or two things of value from this. And now I'm going to kick it over to Andrew, see if there's any questions.
Yeah, thanks, Jim. Thanks, Tom. We did have a couple questions come through. Just a reminder that if you are on the line and still have any additional questions outside of the ones that were already sent, please use the Q&A function within Zoom. As I said, we had a couple come through during the presentation, so I figure we'll start out with those. The first one being, what do you think is the top selling point for occupational accident when I'm pitching it to my clients?
Yeah, and I think we get this question a lot, particularly in regards to newer ventures. So you have an owner operator. The beauty of the business is that you can start out as a driver and grow a business out of that. Soon you have 17 trucks, and you're looking at, hey, do I need to put together an occupational accident program? We really see it as a sign of a sophisticated and mature motor carrier, and I think it helps with retention. It helps, if drivers gets hurt, bills are getting paid. Morale is high. It shows that you're leveraging the power of 17 drivers together are going to be able to get a pretty good carrier with a pretty good rate, a pretty good package to protect your drivers. I think it's just really beneficial for a motor carrier with I'd say over 7-8 drivers to look at putting something together. Tom, you have anything to add to that?
I mean, I think when you're going into the non-asset world of the independent contractor, the occupational accident, the key selling point to the drivers is and to the motor carriers is that one, it is purchased, it's purchased on a monthly basis, so it's a pay-as-you-go product. It's not like it's an annual bill that they're going to pay. So what happens is drivers, the turnover in the transportation world is on average is 160%. So they're continually replacing drivers and adding drivers on a monthly basis. What this allows them to do is, one, manage that driver per month. And also it gives them a tool to recruit drivers and say, hey, we're not going to charge you for a full year. You're going to pay as you go. And the retention part of it is, as Jim mentioned, it allows the drivers and their spouses to go to bed at night knowing that there's protection for them. And in today's environment, that's one of the most important things the driver is looking for, is the ability to secure what not only his revenues are going to be, how he's going to protect his family or her family.
Thanks, Tom. And then the next question we received was, what is the ABC test? Could you just go into a little bit more detail about how it works and maybe define it a little better?
Yeah, sure. Like I mentioned, there's 3 different planks. A, B, C, pretty simple, right? And the first one is the independent contractor free of control and direction of the hiring entity. And I think that is really pretty customary for any independent contractor test. Again, there's a couple other ones out there. And there's several aspects to look at. Like I said, are they wearing uniforms? They have to be there at a certain time. Pretty easy to dive into that one. The next one is generally the knockout, the toughest stake in this, and that's performs work outside the usual course of the hiring entity's business. And that's one where, you're looking at say a trucking company, you're a truck driver driving for a trucking company, doesn't really pass that test. So then I think what we're seeing is some companies, like I know the gig economy is say, Uber saying we're a technology company who have drivers that drive for us. So, they're not technology, so they pass that test. So give you a little better, different idea as kind of how the B stake works. And then C is the worker customarily engaged in independently established trade. I think there you're looking for, if you have a tech IT, an IT contractor, that they are an IT professional who contracts out to different entities. That it's not, you're not trying to play games. Hopefully that helps. Tom, you got anything to add on that?
No, Jim, I think you had that well stated, but the biggest piece is, to reiterate, California is, the state really made a push for this, but has backed off pretty hard because there's been several injunctions against the implementation. So it's not implemented. There's many groups within the transportation industry that are fighting the whole concept of letting this go through, because if we can fight it off the way it has been, it would be a good thing for everybody, because again, it would probably loosen some of the laws in New Jersey and North Carolina.
Yeah, and North Carolina being another state where the driver has to have workers' compensation. So 2 more quick things on there. Then if there's no more questions, we'll be done. One, the ABC test also starts off with the premise that you are an employee, and you have to prove that you are not an employee, which obviously is a little higher burden. And then 2, I think it's pretty much understood that it's going to go to the Supreme Court one way or another, and that everyone's just going to keep appealing until this thing goes to the final judgment. So, any other questions?
It looks like we just had one other come in through the chat. Though again, it's actually easier if you send them through the Q&A section versus the chat, but I will read this one off now. So I am an agent who writes an occupational accident policy for an entertainer coach company. The drivers are listed as independent contractors, but they do not own the coach. They are hired as a driver only. One of the drivers had an accident while driving the coach. He actually blacked out and ran the coach into cement barricades in a construction zone. The company, Great American Insurance, Cincinnati, Ohio, who writes the OCAC policy, did not pay for any of the medical expenses for the driver's injuries. Is this common for OCAC?
Jim, I'll take this one if you don't mind.
Yes.
So it's not common. The question that probably would come up in that claim is simple as, what caused the blackout? Was it an occupational accident injury? For example, if I have a heart attack when I'm driving, that's not an occupational injury. That's actually, that is not something that was created by work. So that would be the pushback that they may have. 9 times out of 10, my question would be is to Great American is where and when are we looking to resolve that, and how? Because they're going to have to define a blanket statement like you're saying they actually blacked out. What made them black out? Was it fuel from the carriage? I don't know. So there's some extenuating circumstances inside the claim I wouldn't know, but that would be a question I would ask is, was it because there was a maintenance malfunction in the entertainer coach? So, and that's where I'd push back on Great American, just saying, hey, have you done the full investigation? Or are you just saying because he blacked out?
Great. Thanks, Tom.
Thank you.
Assuming there are no more questions, I think that's where we'll end today. Like these guys said at the beginning, we tried to keep it to as close to 30 minutes as possible, and I think we were pretty successful in that. So thanks, Jim and Tom. If you guys have any questions, feel free to reach out to Jim or Tom at the emails below. We'll also be sending out the recording of the webinar, hopefully in the next day or two, out to everybody who was on the call today. And feel free to share with any other agents that you're working with or that you think would be interested in this. And with that, I'll let Tom and Jim say any last thoughts, and then we'll close down from there.
That's it. Thanks for your time. Have a great day.
Thank you, everybody. Appreciate your time.
Thank you.